And we call this the unbroken nation, right? Retirement unbroken. And
Hmm.
the premise is that for many people out there, retirement is already broken. They just don't know it yet. So our mission is to help and inform. And truthfully, we've touched on annuities as a tool for guaranteed income and as part of a comprehensive retirement plan that people may consider. It's got to fit in there, right, for their own situation. We've also talked about using it as a bond replacement strategy. So, getting into this and using our time wisely, I want to ask you a question. Why do you think annuities are so incredibly popular right now with American retirees?
Well, honestly, now is probably the best time in my lifetime to own an annuity or to buy one, buy a new one, because throughout most of our careers, Merritt, the 10-year U.S. Treasury has been hovering right around between 1.4 and 2%. Today, the U.S. Treasury is now at 4.2, and it's going to go up even higher because the U.S. Fed went up this week another 50 basis points. And so what that means is you've got, let's say your listeners, they invest $100,000 into a fixed index annuity. That's a 100% financial reserve requirement product. And it's also regulated by the states, not regulated by the federal government. And so the FDIC is it's the way they regulate the banks, and banks only have a 3 to 10% financial reserve to it. And in my opinion, it's a much better situation, because here's the deal. If your listeners invest $100,000 into a fixed index annuity, that is freeing up the annuity company to have $4,200 today at the end of each year to work from and to buy options into indexes like the Credit Suisse Raven Pack or the Credit Suisse Momentum or the S&P 500 or the NASDAQ 100. There's hundreds of different underlying indices that annuities tie and hits your wagon to, and it gives you market-like growth without market risk. And that is a lot more than the traditional $1,400 to $2,000 that they had to be able to buy options. So you've got huge participation rates. You've got 10 to 20% bonuses on these products. They're immediate bonuses, and you've got higher payouts. You also have mortality credits that will allow you to get more than that typical 4% withdrawal that you would get from your IRA over time. And that's going to help the personal economy month over month for your listeners when they're trying to unbreak their retirement. And I would also encourage everybody to reach out to you, because you really can, as an experienced financial advisor, Merritt, you can really fix their retirement. So I would encourage folks to reach out to you as well. But for me, that's why I wrote the book. I wanted to make sure that people understood the power of annuities, why it was important, but specifically now is the best time to buy, because bonds, if you held bonds a year ago, chances are you lost close to 14% or more. You wouldn't have lost that money with a fixed index annuity. I know that's a long answer to your question, Merritt, but I felt like it was just a lot to unpack. I want to make sure I shared that with the audience.
That's a ton of knowledge. It's like somebody just got an MBA in annuities in a minute or so. So Ford, you covered a lot of those things, and you gave us a peek of under the hood and how insurance companies can do what they do and give the guarantees that they're doing. Thank you for that.